Hi traders, Luke Suddards here. Another episode of Technical Tuesdays. I'll be live in TradingView for any questions you may have. Let's get cracking. So the dollar, it's after its big rally, it's seen a bit of stickiness here up at this resistance level around just shy of 104. The RSI is slightly turned roll over from the overbought territory. The line 70. So we'll have to see a push higher from here for the bulls. 105 for me would be the next target. We're back at levels last seen in 2002. Risk assets are getting hit really hard. We did see US yields come off a bit yesterday, which is probably why we saw the dollar struggle to move higher and was down smalls. In terms of like downside moves, I'd say there's a bit of support here around 103. And below there, we've obviously got those lows at 102.2 with the 21-day exponential moving average not far away. Let's move on to the euro. The euro is trying to live to fight another day. I actually wrote a piece yesterday on the possibility of parity. We can see those calls are growing louder and louder. But this 105 area is key. A breach below there and parity obviously becomes much more likely. We can see that the RSI has moved out of oversold territory. It's just shy now of 40. And we'll have to see if price rallies into this 106 area here and above there at that 21-day exponential moving average. I still think the euro US dollar is a good potential vehicle for shorting rallies. So yeah, that's my view on euro USD. Moving on to cable. We heard last night that Liz Truss is planning to basically abandon the Northern Ireland Protocol. So, all factors are sort of aligning for the pound to weaken. Brexit risk premium potentially being priced in. A Bank of England that's not going to meet market expectations in terms of rates, and we've got those ominous economic forecasts, stagflation for the UK economy. So for me, 120 would probably be the downside target. We have to see a break below these lows here at about 122.5. RSI is actually in oversold territory, but it's not as extreme as we saw on that low there. So again, a bit of negative divergence actually, which is actually quite positive for the bulls. So maybe this is the bottom, but I think if we do see Brexit step up, we will see a push towards 120, and the dollar continues to remain strong. But again, like the euro US dollar, rallies will most likely roll over after a squeeze higher. Pound's very sensitive to risk. Euro GBP seems to have broken out of its traditional trade here. Every time it would come up, touch this 200-day, the upper trend line of the descending channel, the RSI would find resistance here and it'd come back down, but we've seen it breach above there now. So in terms of next levels to watch, we're back at like resistance here around 0.86. The RSI is touching the overbought line at 70. We'll have to see the next level will be around here at around 0.865. So another basically 50 pips higher from here. We'll see what price does. And on the downside, I'd say back to this 0.85 area would be a key level to watch. And then below there, obviously, you've got the 200-day simple moving average, as well as the upper trend line of the descending channel. Let's move on to US dollar JPY. Bull flag still in place here. The RSI is just hovering below overbought. Again, on the upside, 131.3 seems to be the resistance and the upside level target. On the downside, I'd say around 130 would be a good level to watch. So another 30 pips lower from here. And the 21-day exponential moving average at 128.2. And then Aussie dollar, I've drawn in this little sort of zone here, support zone around 0.7. There's a bit of a doji candle here. We can see there's a bit of divergence on that low there. Price made a higher low on the RSI. Could we be seeing a bit of a reversal here? This is a very key zone. If we break that, then the Aussie dollar could move a lot lower. Moving on to gold, we can see here, as I said previously in another video, 1850 is key support for XAU USD. Gold sold off quite heavily yesterday, about 1.5%. We'll have to see what price does today around here. And any rallies, again, I quite like, this 21-day exponential moving average is acting as dynamic resistance here. RSI is not really giving us too much information at the levels it's currently at. But next below there's a 200-day simple moving average at around 1830. And this was obviously key range resistance back in last year. Let's have a look at crude. You can see crude, so it's broken out this top side triangle structure, but now it's fallen back within there. It was down a large, significant amount yesterday. 7 and 1. Oh my God. It was down 7%, almost just over 7% yesterday. God, sorry, I haven't had my coffee in the morning yet. It was down just over 7%, which is obviously a significant amount. It came just below that upper trend line of the flat-sided descending triangle. And now we're seeing a bit of buying coming in here in the early morning. The RSI again in no man's land, so can't really discern anything here. We'll have to see if price can get back above that 50-day simple moving average to continue that sort of upward move that we've seen the breakout. And then just lastly, let's have a quick squiz at the S&P 500. We can see here this 4,000 level price actually got below it yesterday, just below it. Below that 4,000 level, there's a lot of negative gamma, and it could lead to an exacerbation in selling momentum. This 4,000 level is very, very important. Below there, the next level is around 3,850 support. The RSI is not in oversold territory, so still got some room to move lower. But maybe today we see a bit of turnaround Tuesday action after that big sell-off yesterday. And then we just take a quick squiz at Fed rate pricing. June, we can see almost 3.5 rates priced in, and July 4.7, and then September similarly 6.7, and December just shy of 9.5. That's it for today. I hope you've enjoyed Technical Tuesdays, and I'll see you all next week for another episode.